Everyone, and welcome to the Lending 101 webinar. My name is Derek Layton, and I will be presenting this webinar today with my friend and colleague, Michelle Oliver. In this webinar, we are going to give you an overview of all the lending products available to you at FHLB and how these products can help you and your institution. Is myself and Michelle, but while we read our backgrounds to you guys, we do have just a little disclosure we have to present before we can continue on with the webinar. So we figured we just give you our backgrounds while we have this disclosure on the screen for you. Essentially, what this disclosure is just stating, any forward-looking statements, about certain market conditions, rates, whatever it may be, that we don't know what the market's going to do. So, things can certainly change. So, please take, any forward-looking statements like that kind of with a grain of salt in this webinar. So, just a little bit about Michelle and I. For myself, I began my banking career in 2014 at a local community bank. Then I joined FHLB Topeka in 2018 as a lending analyst and was promoted to lending officer in January of 2020. And then a couple of my main goals are just to assist members with product education, and then some of my current product education and current and prudent funding strategies to help members make intelligent borrowing decisions.
Good afternoon. My name is Michelle Oliver. I started my career in banking in 2003, so I've been in the banking world for quite a while. I started with FHLB officer in 2021. My main goals on the desk are to assist with product education with our members, as well as any letter of credit needs or borrowing needs throughout the day.
And then, so kind of to get started here, when looking at the contingency planning in the ALCO arena, it is very important to keep both liquidity and interest rate risk in mind. Contingency liquidity planning has certainly come to the forefront over the past couple of years for our regulators, and I don't think it's going to go away anytime soon. So it's no longer enough to simply measure your liquidity needs and forecast sources and uses. You need a strong liquidity management process in place to meet the expectations of today's regulatory environment. Just a couple, easy kind of benefits of being a member of the FHLB. Easy to use funding, funding available in all business cycles. Over the last 3 or 4 years, we've certainly gone through a lot of cycles. Certainly a very low rate environment, and then even today's a fairly high rate environment. We've been there for you, our members, through it all. Then low cost funding, and then we are viewed favorably by rating agencies and regulators. So there are just a couple good benefits of being a member of the FHLB. And then this slide here, if you don't receive it every morning already, I would encourage you to sign up for it. As this is our daily rate indication sheet. It does get emailed out every single day at 9:45. So if you aren't on it, or if you would like to be on it, please reach out to Michelle or I, or your regional account manager. We'd be happy to get you added to the email distribution list. To our products, I figured we would just go ahead and start with maybe our most popular product, or even our most simple product, and that is going to be our overnight line of credit. So one thing here, just a couple of details on the overnight line of credit. It is a minimum $100,000 draw, but there is no minimum pay down. And then one thing to kind of be aware of, I guess, when you are using a line of credit, you can borrow it on it as many times as you want throughout the day, but as soon as you borrow on it, you are not able to pay down the same day. So your borrowing would have to stay outstanding for at least one business day. And then, maybe the most important bullet point on this slide here is that test your line transaction. And the reason why that is so important, as I kind of mentioned earlier on the slides before, the regulators are certainly looking at liquidity in all your institutions' ability to meet your liquidity needs. And that test your line transaction is a great way to demonstrate to your regulators how much excess liquidity you have with the FHLB and how much you'd be able to access at any given moment in time. So I do encourage all of you, if you don't already, to test your line with us. So essentially all that is just borrowing whatever amount you want for one day. Borrow it one day, we pay down the next day, and when we do that, we also send you some documentation, stating that your test was successful, and then in that documentation, we also include your maximum borrowing capacity at any one time, and then also with that, if you're looking to pledge any additional collateral to help maybe meet those liquidity needs, we do include a collateral capacity analysis with that. It's just a great tool to kind of narrow down some different areas where you can pledge more collateral. And then this slide here, I thought it would just be kind of neat to show you guys, how easy it is to borrow with FHLB. And this screen right here is just the members only page that you see when you log in, and you can borrow online. Obviously here, you would just log in, hit that draw button. This screen here, you guys can enter in how much you want to borrow. It'll verify your balances with you, give you the advance rate. So it is very important to double check all that information. This screen here, one thing that is very important for us, really helps our cash management team out anyway, is going to be that bottom section there where it says you intend to transfer or wire out or in your funds. But just by doing that, it notifies us kind of what your intentions are if you do plan to wire those funds in or out, and it just really helps us at the end of the day manage our cash position to better serve you guys. All right, and then for this next slide here, we're going to kind of dig in to some of our more, I would say, advanced products with the FHLB. And the first one is going to be the SOFR Advance. So as this name kind of indicates, it is tied to the SOFR index, so the Secured Overnight Financing Rate, which I think we all kind of know by now. That is the index that replaced LIBOR when that went away a couple years ago. And then just kind of one great thing about this advanced product is for those who kind of typically only use the overnight line of credit. One thing that's great about this product is it does allow you to add some term or some duration onto your liabilities rather than the overnight line of credit, where that of course is just a day-to-day. And as you can see there, we do have terms available as short as 4 months all the way out to 10 years. And again, just a great benefit with this product, it is going to adjust daily to the SOFR index, to the SOFR overnight index, which is again very similar to our overnight line of credit. But again, one benefit about this is I believe our 4 and 6 month advances typically over the last month, I believe, and we're kind of forecasting that these rates will kind of stay the same. It's going to be about 3 to 4 basis points cheaper than the line of credit. So if you're an institution who essentially just rides the line of credit, let's say, for example, you have $20 million outstanding over the last year on the line of credit. And I do realize, this would add some. 4 months is a lot longer than overnight, obviously. But if you're averaging, at least 10 million of that 20 million on the line of credit for the last year, it might make sense to look into, at least putting a chunk of that into the SOFR Advance. Save yourself, 3 or 4 basis points, whatever it may be. Because I think, obviously, in today's environment, every little bit that we can save definitely helps. And then now we're going to get into the bullet advances. And with these, as you can see here, we do have 2 different products of our bullet advances. The short-term bullets, which are 3 to 93 days. And then we also have the long-term, which is again, as you can see there, the 94 to 30 years. Just one kind of detail about these is it's interest every single month, and then principal at maturity is kind of how those payments work. And then some common uses for these are just general balance sheet funding. For example, if you notice you have a bunch of assets maturing at a specific time, and you don't have any liabilities to match up with them, this is a great way to fill those holes on your guys' balance sheets. We'll go another product which I would say over the last 2 years the popularity has kind of maybe waned a little bit. And that's just, I think a lot of people are kind of forecasting we might be at the peak of our rate cycle. So we've kind of seen the need or want with our members of these amortizing advances kind of die down a little bit. But again, these are a great product if you're looking to match 100% match fund, or even do a blended funding where you use FHLB advance and then some of your internal deposits to fund an asset. These are a great product for that, as they are very customizable. We can set them up to match your assets. That way your cash flows every month, every quarter, however you set up your payments, will always line up. So very customizable product that we can match to whatever asset you have. So it is something to look into. And then just some details with that. The amortizing advances, they do have to at least be 1 year, but they can go all the way out to 30 years. And we can do, just going back to the customization of these products, we can do balloon payments, we can delay payments. Again, kind of whatever you're needing to match up with your asset, we can probably make a way for these amortizing advances to work for you guys. And then this one, next slide here, we're going to have our puttable advances, which have been very, very popular since we came out with the product. And I believe we came out with this product in April of 2023, so April of last year, right after our AMC. This product essentially is our old convertible product, if you're familiar with that. Just a few little tweaks with that, and we'll kind of get into those tweaks here later in the next couple of slides. But essentially, we just had to change a few things, and then we did that, and then came out with this product, so to essentially replace the convertible advances. And again, I would say since we came out with this product in April last year, next to our line of credit, this is arguably our most popular product right now, just because the rates you can receive on these advances are quite a bit cheaper than any other product. And again, as you can see here, just some common uses for the puttable product, and kind of the main use I would say our members take these down for is just to lower the overall cost of funds. When lower your overall cost of funds when you're comparing the puttables to even CDs that you guys may offer, or even our bullet advances here at FHLB. And again, kind of the reason why these puttable advances are so cheap, or cheaper than comparable bullets, is because you guys do essentially sell the option to FHLB, as FHLB Topeka holds the call option, or as you can see here, called the put option on these advances. So that is kind of the reason why these advances, are a little bit cheaper than bullets or SOFR advances, line of credit, whatever other product we have, is because we do hold the call option to call that. And then as you can see there, the available structures, we have 1 to 15 years in term with a lockout period of 3 months to 5 years. And then the two structures we offer are called Bermudan, which, as you can see on the screen here, has quarterly put options, or the European has the one-time put option after your lockout. And then now we'll just kind of get into how these puttable advances work. So for example, you guys would call in, and then you would just say you're interested in a 5-year, 1-year Bermudan or European. So what that kind of indicates is indicates a 5-year maturity with a 1-year lockout. And then the rate is going to be fixed for the life on the advance. You don't have to worry about any adjustable rate or anything like that. But there is, so at the end of the lockout, though, the lockout period, so at the end of 1 year, so March of 2025 will be the lockout period here. And then again, FHLB is going to hold that put option. So we would have the option to call that advance in 1 year from now. And again, as I kind of mentioned earlier, depending on if you take down the European option, that is going to be a one-time call option for FHLB. or if you do the Bermudan option, that would be quarterly call options for FHLB after the lockout period until your maturity. And then kind of one difference between this advance and our old convertible advances, that is if we do decide to call the advance, you guys do have to prepay it. So that either means wiring in funds to make the payment to pay down the advance, or you can call us or your regional account manager, and we can kind of talk about some other advances that you might want to take down to replace the funding. And then again, I kind of mentioned this a little bit earlier, but if we don't choose to call the advance, it will remain fixed at that same rate until the next option date or through its date of maturity. And then this here, kind of wanted to I know that it is kind of small in C, but sorry for that. It's just a lot. There's a lot of rates to show on here. That's kind of why we don't include it on our main sheet that we email out every morning. But on that sheet, you'll notice in the puttable section, it does say other structures available upon request. And what this spreadsheet here is, it states all of our rate indications for every single puttable advance that we offer. So again, as you can see there, a 1-year advance with a 3-month lockout, all the way down to a 15-year advance with a 5-year lockout. And then just one thing that's kind of neat about this spreadsheet, or I like, is obviously you can see there in that gray column kind of to the right, it kind of compares the difference of the Bermudan option versus the European option. So kind of one thing to keep in mind when you're looking at this is, for example, let's just look at that 1-year, 6-year option. You can see there that the rate indication for the European is actually 2 basis points cheaper at 5.23. So again, that kind of, when you're thinking about maybe taking one of these down, that is one thing to consider. As if you sell more options, you essentially sell more options to us, which the Bermudans, of course, there's more call options on that structure, as the European is only one, is a one-time call option. That is one thing to consider. So looking at this 1-year, 6-month puttable, if I was to take this down, I would say there's really essentially no benefit in taking the Bermudan structure down, as you have to pay a higher rate. So it just doesn't make any sense to take the higher rate and then pay for more call options, or pay a higher rate for more call options. So you would want to consider the European structure in this specific scenario. And then also too, as you can see, we do have the comparable bullets over there. So for example, I'll just stick with the 1-year option. You can get a 1-year bullet at 5.22 compared to, I guess this is kind of a bad example, but I think you guys kind of get the picture there. You'd want to compare the final maturity and your lockout when you're taking down a puttable advance. So I guess a better example of this would be our 5-year, 6-month puttable option, at 376 for the Bermudan structure, or a 5-year bullet at 442. So that's just some couple things you would want to look at if you do, get this spreadsheet. Just a couple things to consider, when you're looking at taking down a puttable advance. And then now we'll kind of move into the last kind of advanced product in our product suite. That is going to be our forward settling advance. And again, very similar to the amortizing advances. These were probably a little more popular a couple of years ago when rates maybe were lower. Were a little more popular when rates were a little bit lower a couple of years ago, whatnot. And again, interest in these has kind of died down a little bit. But one great benefit about this product is it was designed essentially for construction to perm loans, so it kind of help you and your customer, be able to lock in the funding for the permanent side of your loan while you can do the floating option for the construction portion of the loan. And then again, just a couple of details here. As I kind of mentioned a little bit, you lock in the rates today. without adding immediate liquidity. So essentially, you don't get the cash until the settlement date, and so with that, stock, collateral, interest, none of that is charged until the advance actually settles. So there is no, penalty, I guess to say, or there's no downside or extra cost, I guess would be a better word to say, in taking down these forward selling advances, as you don't get charged anything until the advance actually settles. And as far as the delay period, we can have these delay 5 days up to 2 years in time. So you do have a good window there to match up whenever you might need some excess liquidity. And then again, with these, they are available only in our bullet or amortizing advanced structure. So we can't do a forward selling puttable. We can't do a forward selling SOFR. So we would have to limit those to bullet or amortizing structures. And as you can see there, bullets 94. So our long-term bullet terms, 94 days to 30 years, and then our amortizing will be 1 year all the way out to 30 years. And then just a couple benefits for the forward selling advance, as I just mentioned on the previous slide. No interest, collateral, or stock until the advance actually settles. The second bullet point probably isn't too great of a point in today's rate environment, but so a couple years ago, these were a lot more popular, as I said. But they do protect you against rising rates, which us probably being in our peak of the rate cycle, maybe here in a couple years, if rates start to fall, I assume these are going to start gaining a lot more popularity. And again, it allows you to be competitive by enabling you to match fund construction to perm loans with your customers. And again, all the customizability that I mentioned on the amortizing slides, we can do all that exact same stuff on these forward selling advances. And then that kind of wraps up everything for the advance side of it. And then so now I'm going to toss it over to Michelle here, and then she's going to start talking to you guys about our letters of credit.
Thanks, Derek. Right, so let's talk about letters of credit. Essentially, your beneficiary to use the Federal Home Loan Bank's AAA rating to collateralize public unit deposits. These can be used instead of pledging securities. Our high rating ensures that the safety of your beneficiary's deposits and makes our letters of credit widely acceptable. If the depository were to fail, the public unit could draw on the letter of credit with FHLB to recover any deposit amounts. We have yet to this day to come across a depository beneficiary that does not accept a FHLB letter of credit. There are many uses to using our letter of credit. You can look at our letters of credit as an option to eliminate a lot of monitoring of market values or worrying about pledging and releasing securities between you and your beneficiary. Essentially, you're just setting our letters of credit and forgetting it. The only thing that you would need to be able to track is just the maturity date. So we have members that issue letters of credit as short as 1 to 2 day terms. We also have members that issue them up to a year. We do recommend not issuing them for longer than 1 year. We like you guys to essentially take a look at what you have as deposits and whether or not you're completely covered, or if you need additional coverage or less coverage at least once a year. It also eliminates scrambling if you were to put on low securities on the books and then have it get called away. And then don't forget about the improved liquidity ratios by unpledging securities. And certainly there are ways of boosting earnings by using letters of credit, by trading securities for higher yielding loan demand, or revising your investment strategy to allow for higher yields, maybe unpledging securities. Button, and when you click on that, it will take you to the next screen. If this is a beneficiary that you have issued to in the past, it will be available to you here in this drop-down menu, and you can select your issue date as today or up to 5 days in advance. If you know you're going to be out, but you need a new letter of credit replacing a maturing letter of credit, you can set those up to 5 days in advance. And then you select a good business day as an expiration date, the value that you would need to have the letter of credit for, and then whether you would like them to have multiple draws permitted or prohibited. Issue letters of credit, but not finding what they're looking for online. I will tell you, if you have any special conditions that are approved and listed as an option for your letters of credit, those letters of credit are not something that you will be able to issue online. You will need to complete the PDF form in order to issue any letters of credit that require special conditions. Who would prefer to just kind of use the old method, we do also still have that available. Issuing online is not required. If you would like to, you can find the PDF version of our letters of credit application on Members Only. You would just complete that form, email that into our lending inbox, and as long as we receive those applications by 3:30 Central Time, we can issue same day. Talk about stock. Once your FHLB activity has reached a level that is fully supported by your membership stock, any additional activity will require a purchase of Class B stock. All purchases are always Class B stock. On the desk, we tend to refer to this as overcoming the membership hurdle. So supporting all of your borrowings with Class A stock and then requiring new purchases that would be 100% Class B stock. When those purchases are made, those purchases stay outstanding as required Class B stock until the activity balances are reduced. When activity is reduced, stock requirements are also reduced. This stock becomes excess stock and will stay excess B stock until the following day, where it's moved over and becomes outstanding excess A stock for dividend value purposes. And then you are also welcome, if you do not want that Class A or B stock to be outstanding, you can submit a redemption request form in order to redeem the stock.
And then just one other thing I wanted to add here with this is, just because we're right at this timeline, we just ended our first quarter. Management and the board did approve our first quarter dividends. And then so those emails, if you haven't received them already, should be going out shortly. And then also, be on the look. I believe Friday is Friday is the last good business day of the month. And that is when dividends, will be paid. So be on the lookout for the pre-dividend notification. That way you guys can kind of see where your dividends and everything line up.
Hurdle, we can take a closer look at the dividend benefit. When comparing FHLB advances to the IORB, you're earning approximately 4.10% more on your capital than with the IORB. However, with the purchase of the stock, that dividend benefit actually equals about 18% or 18 basis points. Sorry. If you don't include the IORB in the dividend benefit calculation, you're actually looking at a benefit closer to 43 basis points.
And then, again with this on this slide here, guys, this is kind of shows you how we calculate our dividend benefit, that we state on our daily email sheet and whenever we're talking to you guys on the phone. Obviously, this is a very conservative dividend benefit. As Michelle kind of mentioned, if you take out the alternate reinvestment rate of the IORB, your dividend is going to be around 43 basis points. But of course, we know that purchasing stock does come with a cost, so that's kind of why we just want to include the IORB as the alternate reinvestment rate, and why we're fairly conservative when stating our dividend benefit to you guys. And then so that kind of wraps up all of our products and our stock that we have on the lending side. We obviously have a lot more products available to you, products and benefits available to you guys, throughout the rest of the bank, such as, our HSP, our new turnkey suite of programs, stuff of that nature. But we just don't really have enough time to include those products in today's webinar. But so if you are interested in any of these lending products or any other products available to you at FHLB, please reach out to Michelle or I or your regional account manager. We would love to talk to you guys about those. And then kind of getting into wrap kind of the webinar up here, we did just kind of want to mention, if you haven't noticed, we have been sending out a bunch of emails and communications to you guys as we are, kind of making a big change here at FHLB. We are going more digital or more electronic, which we think, our members are going to absolutely love kind of once we get over this first step. And then that first step is this master transaction agreement. So if you kind of haven't heard or seen emails on this, essentially is what this is. It is replacing 10 paper agreements, such as who can borrow at your institution, who can wire out, and then et cetera, 10 other agreements, and that's all going online. So after this kind of stage is complete, you guys will not have to chase everyone down, have people sign new papers and documents. You just simply log in. Your web administrator will simply log into the website, and then they can change who has access at your institution to borrow with FHLB, and again to wire out. Everything's just going to be a lot sleeker and a lot cleaner once we get to this stage. But one thing that is that you guys get this back to us by May 3rd, that is our deadline for this new master transaction agreement. And with that, I kind of want to preach to all of our members, please, as soon as you can, get this into us, because I think we all kind of know with anything that it is, no matter what, the longer we wait and get closer to the deadline, that we kind of tend to have more problems, whatnot. And then also on this page here, if you haven't seen any of the communications we sent out, there is a QR code on this page. You can scan that, and it will take you to the landing page that will kind of walk you through and has some FAQs, and everything that you need to know about the MTA. Or you can give Michelle or I a call, or even again your regional account manager. We'd be happy to talk to you guys about that if you have any questions. So if none of you have been to our annual management conference or our AMC, I would highly encourage you to sign up. It is a great conference. All of our members are there. It's a great way to network. We have great speakers. You get to see Michelle and I, all your regional account managers, some other FHLB business partners. It is just an awesome event. We get great feedback on it every single year, and we are absolutely proud to host this for our members. And again, so our annual management conference is going to be April 17th through the 19th in Overland Park. Again, I would highly encourage you guys to sign up. And then you can sign up through our public website, or members only. Sign up through there. We'd love to see you guys there. And then last but not least, again, our main goal, Michelle and I, everyone on the lending desk, everyone at FHLB, our main goal is to be your trusted funding and liquidity partner. And again, so in this kind of a big bullet point I like to point out on this slide is we do have countless tools we can provide you guys. Our collateral capacity analysis. We have a letter of credit tool, as Michelle kind of mentioned earlier. We can break down that tool where it makes sense to issue a letter of credit or go purchase a security. We have a marginal cost of analysis tool. We have multiple tools, available to your members, or to you, our members. So please reach out if you have any, questions or any ideas or whatever that you may have, and we'd be happy to run those tools for you. And then kind of last but not least, just kind of want to put, all your regional account managers and then Michelle and I's contact info up here. So, if you do ever have any questions, our contact info is available on the slide. Those are our direct numbers, so please, feel free to give us an email or give us a call. We'd be happy to talk to you. And I think that kind of wraps everything up for today, guys. So, as always, we appreciate your time. We hope you enjoy the webinar. And then if you please could fill out that survey in the chat, it kind of gives us some great feedback on what to, present in our next webinar, and kind of if we need to spend more time on a certain product or certain area within the bank. So again, thank you very much, guys. Have a great day.